Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Monday the 29th of June. There's been a deterioration in outlook for risk appetite in the last few sessions, really, and it's started to come through that there's second wave fears, certainly for the United States, but other major countries as well, such as Japan, Australia, and the UK are starting to see infection rates rising again of COVID-19, and the prospect of renewed lockdown measures being brought back in again is sort of growing, really. The United States is being the biggest hit, with significant increases in infection rates in certain states. And it'll be just interesting to see how this affects the dollar going forward, because the dollar has been seen as a safe haven and it's not really benefiting as much as other safe haven assets have done in the last few days. So that's interesting that we've seen that. But what you have seen are treasury yields, which have fallen away. A little bit of a rebound today, nothing too significant, but that rebound has allowed equity markets just to bounce slightly. But there was a sharp move lower into the close on Friday. Little uptick on treasury yields now. On equities now. Wall Street futures are trading higher, but nothing too decisive. And there is still this prospect that the market is rolling over now. So generally speaking, what we've seen is gold, which has been positive, and I'll talk about the technical implications of a break above 1764. But also you've seen the dollar, which is not performing all that well at the moment. Euro dollar up 0.5%. Dollar is slipping basically about 0.2, 0.3% across the board on the commodity currencies. Sterling dollar now trading down, so interesting slide back on cable. But generally speaking, this risk aversion is sort of going to be playing out, I think, through the news flow, really, how the news develops regarding these second wave infection rates, or you could even argue first wave infection rates, rising again in the States. Okay, so what about data points today? Well, we haven't got a great deal. We've got the German inflation numbers at 1 o'clock. Find that. German inflation, they get released throughout the day, but the countries or the national inflation data expected to increase actually by 0.4% on the month HICP, and that will bring the year-on-year number up to 0.6%. So does that have a read-through to Eurozone data tomorrow, maybe? And also we're looking out for the pending home sales to the United States. Fell 21% back in April. Well, 22%. Expected to see a rebound of 19%. So it's still lower, but on the net basis on that regard. But yeah, big bounce in May expected there off the April numbers. So that's it pretty much. Now my chart of the day is the euro yen. Now what we have seen is euro just struggling in the last couple of weeks, really. And that struggle has sort of come about through a little bit of a corrective move. We had a strong run higher through May, which brought euro dollar significantly to 124.40 before unwinding. And that was 500 pips of unwind, might add. 50% fib retracement of the bull run. 500 pips. 1,000 pip rally. 500 pip pullback. Now it's sort of playing around with this, but look at this uptrend. Playing around between 50% and 38.2% fib, looking to break through 38.2% fib today. Hasn't managed to sustain a move in recent days, but look at this. Lower highs in three successive days have now been broken, and a big swing potentially to the upside. So you'd be looking out for an upside break above 121.10. That was the resistance that was found on, what was that, Tuesday last week? And if they can break out above that, that really would suggest that this uptrend is kicking in. The momentum indicators, look at that RSI 55, stochastic starting to find a bit of upside traction. MACD line starting to turn around. It looks as though this corrective phase has played out and it's starting to sort of gather a bit potentially for a renewed upside. Now, the question would be, is this just sort of bumping along with a consolidation? you need to see closing breakouts, I think 121.10, and ideally above 121.40 as well, that February high. If you can clear that, you really are starting to sort of think about 23.6% fib again. But just be careful, you could still be in a bit of a consolidation area, but the market has improved in the last, certainly on Monday, and from Friday's low, which was another potential higher low there at 119.80. So yes, starting to gain a little bit of traction again, and euro yen is starting to pick up. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.